Well, Profit Insights today has a conversation with Laurus Labs. The 3Q sales were subdued on a high base, but even normalizing for the impact of the COVID-related order benefits last year, sales grew by about 6%. And while gross margins have improved and they've stayed above that 50% mark for a while now, due to the negative operating leverage due to the growth in investments, continue to keep the EBITDA margins at 15% for the third quarter on a trot at the very least. Dr. Satyanarayana Chava, founder and CEO of Laurus Labs, joins in to talk about the quarter, the first 9 months, and what's the outlook, which in the con call seemed to be a bit more constructive. Dr. Chava, good having you. Thanks so much for taking the time out and speaking to us here. Niraj here, good morning. I want to start off, Dr. Chava, by talking about a comment that I picked up from the con call, wherein you said that the volatility was driven by the timing in some of the CDMO related businesses. Could you explain that in some more detail, sir?
Yes, good morning. See, as we mentioned in the previous con calls, the H2 is going to be better than H1, and we are committed to that statement. And as we have seen, the numbers, what we are looking at for the Q4 are looking attractive. And that's the reason we believe the worst is behind us and good times are ahead of us. The segments, what you can see, the generic API, ARV API is stabilized. And where we are guiding that ARV, both APIs and formulation put together, will reach a plateau around 2,500 crores, give or take 100 crores. So we are at that level last year, this year, and next year also. We anticipate the ARV revenues will be in the range. Oncology, as we have seen from quarter on quarter, we are delivering better numbers. It is also surprising for us we are doing so well in oncology. And our numbers for next year, when we are putting our budgets, are even more accurate. And then our CMO business in generic APIs is also doing good. So this is the area where our deliveries were deferred by our partners to Q4. That is one reason where we didn't increase our numbers. And the other is some of the deliveries in CMO also were deferred by several weeks. These are the reasons for not so good performance in Q3. But the gross margins were very healthy at little over 54% in Q3. And in Q4, not in Q4, see, we have delivered that kind of gross margins for several quarters, as you mentioned in the past. And any quantum of business improvement will definitely help our EBITDA margins to go about 20%. That's also looking very promising in this.
Okay, since you've started with the big overall picture, I'll do that and then I'll come to specifics, particularly CDMO. You mentioned in the call as well, that the slower Q3 performance will rebound from quarter 4 onwards. FDF, optimum utilization from Q4, pick up to Onco will probably continue, scheduled CMO delivery, etc. So is there a marked improvement, Dr. Chava, that you expect in quarter 4? Because for H2 to be better than H1 as well, relative to what you've done in Q3, there needs to be marked improvement, not from just a top line perspective, sir, wherein you are steady. But the bottom line numbers look a lot lower than what were estimated by brokerages.
You are absolutely right, Niraj. When we are saying the Q4 will improve, see, I'm giving a number. So in any improvement in our sales, assuming you do 54% gross margin, continue to do in Q4 as well. So 100 crore gross margin extra, most of them will flow into EBITDA. And then the EBITDA margins from current 15% level, I'm sure from Q4 onwards will move towards 20 plus range.
So you expect revenue numbers to be good, and on these stronger gross margins, there to be line item by line item some bit of improvement as well. Okay, since we're talking of line items, Dr. Chava, just one quick word that I picked up in a couple of notes and a couple of messages that came to me, and that's around two things. One, the net debt or the leverage, which is at a high, I mean, 1.4 times the past 2 years, has inched up significantly, maybe at levels which were last seen a few years back. Now, arguably, on the back of the increased investments that you've done, do you expect these numbers to inch up further as you continue to invest more? Or do you believe these will stabilize or probably show a trend lower in FY25?
I think we have reached our peak debt levels. We don't expect the debt levels will increase further. And FY25 will see significant reduction in our ratios. In the sense debt by EBITDA, we are close to 3. It will come down very well in the FY25.
Okay. And since I'm on numbers, so before I come to the business segments, line item by line item, the other aspect is, of course, by virtue of the fact that there's a higher gross block addition. What is it, about 6,000 crores currently? Your return ratios have come off. Do you reckon that for the near term, these could be the nature of the return ratios, or do you expect improvement there too as utilization levels improve?
See, we have two options, Niraj. See, don't invest in the opportunities where the company will do significantly well in the future. If we decide not to invest for next 5-6 quarters, we can return our debt. Is that the right thing for the company? When the entire world is looking at diversification, when they look at diversification, they have to see the scale for them to have confidence in good business. So we have taken a judicious call to invest and secure future, although our current is a little bit painful. And we are very conscious and judicious in our investment. As you have seen, our animal health, we have invested close to 300 crores. We are again investing another 50-60 crores to build one more block. That is based on a long-term contract. We just validated one product there, and we are validating another product as we speak. So the validations in that animal health facility will be completed by March, April 2026. That is the kind of plan we have in place for many initiatives. Apart from CapEx, we won't talking about CapEx, but we also invested 450 crores in non-CapEx related investment aspects. We invested 300 crores in Laurus Bio in the equity, and about 120 crores in Immunoact, and another significant money in licensing patents from IT. These investments are very, very good for the organization in the medium to long term. Currently, when CDMO customers come and visit our facilities, they definitely go to our bio facilities because there are very few companies who can do fully integrated enzyme engineering, enzyme manufacturing, and biocatalysis fermentation. So people are very happy to give their projects because of our enhanced technical capabilities in that space. So if you put CapEx and these equity-related investments, we have done 3,500 crores in the last 3 years. And that is very important for company sustainability in the future. As I have mentioned, we have to diversify, and each diversification step will create some pain initially, and the gestation periods are 3-4 years. So we have taken many initiatives of diversification at the same time. That is also giving some additional pain for us, but there are many positives right now. So we are having less concerns because we increase our debt, we increase our gross block, but we are cementing and securing our future.
Most certainly. No, I'm not one to tell you, Dr. Chava, that you shouldn't do X or Y, but because you're a listed entity and because there have been comments made in the past about from when does this recovery start to come in, and because due to an issue or two it might be getting delayed, and hence my question around what could happen to the numbers in that interim period. I will get to from the number line items as well, but this question around the lower return ratios, do they stay like this for the foreseeable future until the pickup happens? Or do you expect a pickup, say, in Q4 or Q1 or Q2? Or that is wrong to expect right now?
The pickup will start from Q4, and we expect that will continue.
In the return ratios as well. Okay, great. And just before I take that break, Dr. Chava, you believe that your gross margins will stay steady at 52%, but because there is an expected pickup in Q4, there might be an uptick in EBITDA margins as well, because you mentioned that this will flow straight to EBITDA, some bit of it, and then therefore to the bottom lines as well.
Yeah, you are absolutely right. See, last several quarters we were able to maintain a bit gross margins above 52%. And last quarter was 54.4%. And we expect our gross margins will remain in that range.
Fair call. Dr. Chava, lots more to talk about on the specific line items, particularly CDMO, the Animal Health project, which I would love to know more about. We'll take a very quick break, come back and continue our conversation with Dr. Satyanarayana Chava. Back with Profit Insights in conversation with Dr. Satyanarayana Chava of Laurus Labs. Dr. Chava, I want to get to some specifics now. We were talking about the CDMO piece and the Animal Health project. Now, I believe a couple of notes that I read stated that the Animal Health project has been delayed by a couple of quarters. I would love to get some clarity here. What happens here? When do we see validation, so on and so forth? When does the market see some bit of numbers coming out from there, depending on the plans that you've laid out?
The Animal Health business, our contract with our partner is for more than 20 APIs. Some of them are still patent protected. And one product which they are filing NDA soon. And there are several products which are generic. And our schedule, when we signed this agreement 2 years back, we're supposed to complete all the validations by end of 2025. Based on the current timelines, what we foresee, this will be delayed by a quarter, and we expect to complete the validations by March, April 2026. This delay, partly because of few weeks qualification delay of the facilities and few weeks delay from partner because of their increased analytical and regulatory requirement of API. Otherwise, this program is running very well, and several products were lined up for validations right now.
Got it. Just so that I understand this better, Dr. Chava, so therefore, one of the beliefs is that one of the notes, for example, Citi, which has come out with a note, says that they expect synthesis sales to remain range bound until the pickup in the animal health project that has witnessed some delays. I would love to understand from you. You mentioned, let's say, timelines of April 2026, which is Q1 FY27. My question, therefore, is that until then, do synthesis sales remain range bound, and would animal health revenues from this project start only after all the validations are done, or do you do part commercialization sometime earlier?
Commercialization happens for the products which are validated and which are about to be validated right now. So we already have an order for commercial quantities next year. So that is going on a very steady state. In the CDMO space, Niraj, we are very well diversified. Our CDMO consists of human health, animal health, branded cosmeceuticals, nutraceuticals, steroids and hormones. So it is a well diversified portfolio. And in the medium term, our success in CDMO, one component is animal health, but that is not the only driver which will improve our revenues in CDMO. It is, I can say, the animal health is not a major portion for our growth plan in the CDMO. There are other levers which will give significant benefit to us in our CDMO.
Of the animal health project getting commercialized maybe in April 2026 or maybe a quarter later, who knows? You believe custom CDMO could actually show a better performance in FY25 over FY24, Dr. Chava? Definitely. Okay. Significantly better, you think, based on the plans or the foresight that you have right now? Significantly better. Okay. The other aspect are the two other small things, or smaller things, if you will, relatively. Laurus Bio has shown significant traction. You've invested some more money there as well. What are the plans to scale this up? Do you do some other partnerships with global companies for this? And what's the run rate for Laurus Bio? Because it's grown at a fast clip, but on a low base. What happens starting FY25, Dr. Chava?
See, we did some debottlenecking exercise at the facility which we call R2. With that, the FY25, they will grow the revenues from FY24. In FY26, we expect our investments in R3 will also come into commercialization. So the bio division, as you mentioned, because of small base, the growth percentage base is very good. But at the same time, from 50 crore when we acquired, now it is 160, 170 crore run rate. And our customers, when they visit our manufacturing facilities, they are very happy to go and see our capabilities in the enzyme manufacturing. So it is very synergistic, and we're very happy with the investment what we made. And most of the business our bio division is doing is contract manufacturing. And we have a very global clientele there.
Okay. So, Dr. Chava, would you need to do any kind of partnerships with any global majors in Laurus Bio, or do you continue like this on your own for the time being?
I think for the time being, we are happy to do what we are doing because the current capacity is almost sold out. And there is no need for us to look for any business development deals right now. So until our R3 at Mysore comes into live, we don't have too much of spare capacity to sell our services.
Okay. Finally, Dr. Chava, so we've covered most bases, at least for the time being. I'm looking from what you said that Q4 would be better as well. In your presentation, the last question, you mentioned that the near to medium term priorities include higher capacity utilization across segments to support growth acceleration, scale up of the new animal health commercial asset, and continuous improvement initiatives. Any one of these which is a high priority for you if we haven't spoken about it thus far?
The increased asset utilization is an outcome of higher sales, what we anticipated from now on. So otherwise, without anticipated sales, we don't want to produce more and keep increasing our inventory. That's one. And second, the improvements in solvent recovery, yield improvement, purchase efficiencies, all those are also coming up gradually.
Okay. Okay. Fair call. Dr. Chava, we'll have to leave it at that paucity of time, but thank you so much for taking the time out and speaking to us today, and all the best for Q4. We look forward to those numbers.
Thank you, Niraj. Thank you. Nice
pleasure. The pleasure is always ours, Dr. Chava. Well, that's Laurus Labs under pressure today, but Dr. Chava confident of a strong recovery in Q4 from Dr. Satyanarayana Chava to Satyanarayana Raju. Well, before we wrap, here's Canara Bank's MD and CEO talking about Q3 earnings, where the bank witnessed a healthy asset quality growth and double-digit rise in profits. Listen in.
If you observe our figures, our retail term deposits are going consistently. And in the current financial year, so far, we have absolute numbers, 31,000 crores, it has been grown. And every day we see that there is a 3-digit figure accumulating to this. So we want to see that our core deposits, like retail term deposits and the CASA should grow consistently. Whatever the shortfall we find for meeting the requirements of the liquidity LCR as well as the credit demand, only to that extent we want to go for the bulk deposits. We don't want to be part of that, what the competition is going on in the market for the bulk deposits. We are not part of that competition because we are very cost sensitive.
Okay, sir. So what about raising rates on these TDs?
No, already our existing 444 scheme is there. That is offering at 7.25% for common public, and senior citizens already getting at 0.5% extra, and super seniors, they are getting it over and above, again 15 basis points. So that is more than enough, and there is an accumulation in the retail term deposits in this scheme, madam. I don't see any requirement at this moment to increase further.
Okay, sir. Thank you so much for that clarity. Sir, one very important number that stood out for me in these earnings was your other income is up 7.7% on a yearly basis, but down on a quarter-on-quarter basis. Can you please help us understand what exactly is happening here?
See, other income always we should compare from year on year. You should not see that sequentially, because in the financial year, in several quarters, you will get one-time fee structure, like a CGTMSC or like any card income is there and all. That's why you have to, if the real picture, if you want to see that, you have to compare year on year. You should not look at that the quarter on quarter. If you look at our last December quarter, our fee-based income is 1,606 crores. Whereas compared to this year, it is 1,772, and with a 10.34% growth rate is there. The 10% is growing at fee-based income is a good growth, madam.
Okay, sir. Got it. So, have you made any provisions on AIF investments? And why I'm asking this question is largely stemming from because a lot of banks across the system are making some sort of the other announcements regarding this. So, anything from Canara Bank's side on this?
It's very, very, very minuscule amount. It's only 7.82 crores and we have provided 100%.